In today's video, we're going to be talking about Lululemon stock and whether or not it's a good buying opportunity on the dip. We're going to look at the fundamentals of the company, look at their revenue stream, see where they're making money, where they're struggling. I'm going to talk about why the stock is down to begin with, and then we're also going to look at some really good news that just came out today that I think is super bullish for the company overall. And then we're also going to look at the PE ratio to see if the company's undervalued based off of that metric. And then of course, towards the end of the video, we're going to look at some trade ideas. We're going to look at the charts and the technicals of the company and see how we can make some money. So if you are a Lululemon shareholder or you're just looking for a company that you can buy the dip on that has a lot of upside, and then this is a video that you're going to want to see. And if you like content like this, please consider subscribing to the channel, liking this video, and let's jump right into it. Okay, so first things first, before we jump into the fundamentals, why is Lululemon down to begin with? I mean, it's down, I think, 67% from its all-time highs that it made back in 2024. I mean, the stock was trading over $500 per share, and now it's trading at about 180 something. I mean, that is huge, right? I mean, the company has just been ripped in half. It's been a bloodbath. And the main reason for this is obviously tariffs are not helping. We are in a high interest rate environment. And then on top of that, we are seeing the growth rate of the company slow. We're seeing their sales in America decline or, pretty much flatline, which we don't want to see because that is their biggest market. And then obviously we're not seeing a lot of growth in the markets that they've been entering, right? So those are some of the biggest reasons why Lululemon has been down so much. So what happens is when a company's showing like massive growth rates like Lululemon was, and we'll jump into the charts here in a second, it demands a higher PE ratio, right? At one point it was trading like a 65 PE ratio. Now it's trading at a 15, right? Like that's a huge difference. It's only because, back then we were maybe growing at like 50, 60, 70%, whatever it might be. And then now we're like growing at, maybe 7%, right? Like that spooks investors. And they're like, whoa. Like this company does not demand this high of a PE ratio anymore. And that alone could just drop the company and cut it in like half. Or more, right, in this scenario. So nonetheless, those are some of the biggest reasons why Lululemon has been seeing so much downfall. Now, with that being said, we just got some great news today that Lululemon partners with the NFL and Fanatics for team apparel. The collaboration boosts market sentiment and reflects a strong investor interest. I mean, this is huge because the NFL is a huge market, and they're going to be selling apparel for both men and women for all 32 teams. I'm not exactly sure what kind of revenue stream this is going to bring in, but I can tell you this, that this is definitely bullish news. I was already pretty bullish on the company, and I felt it was undervalued. And when news like this comes out, like this really changes my whole sentiment about this stock, in my opinion. So with that being said, let's go ahead and jump into the fundamentals. Okay, so first things first, we're going to take a look at the total revenue for Lululemon. And you can see here, like this chart looks good, right? Like there's nothing wrong to this in my opinion. It looks like they're growing revenue great. And you can see here that I'm able to look at the projections into 26, 27, and 28. And you can see that we are projected to continue to grow. But this is the issue. And this is one of the reasons why you're seeing the stock decline. Look what's happening right here. It's almost like we're flatlining. We had this like massive growth right here, and then all of a sudden it's like, oh wait, like we're at a standstill. We're not growing anymore, right? That spooks investors, and that obviously is not going to demand a high PE ratio when the company is only growing, at small percentages. But you can see here, right, in 26 and 27, they're not expecting too much growth between, now and a year from now. And then 27, it looks like we're going to get back to some, and then, 28. Now, obviously, these are just projections, though, right? This is just what analysts think, right? Based off of their analysis, which this obviously can all change. And that news that I just told you about them with the partnership with the NFL, like this is going to grow revenue, right? This is going to be a whole different stream of revenue too than what we're going to look at here in a second. Okay, so moving on, let's look at the net income. This is another reason why we're seeing the decline in the stock price. Look where we're at right now, okay? We saw a decline in net income. Like we went from making more and more money to making less money in one quarter, right? And again, we don't want to start seeing a downward trend. And so obviously the market's forward thinking. They see things like this, and then they come out just to let you know, like with guidance during their earnings call last time, and pretty much said like, hey, like we're cutting back our guidance. Like we're not super confident in this environment that we're in right now that we're going to be able to grow what we thought we were going to. So we're going to say, hey, we're cutting that back a few million. Investors hate that. Right? We're forward thinking, or all investors are forward thinking for the most part, or the stock market is at least. And so when anyone comes out and says, hey, a year from now, we don't expect too much growth. Well, the stock's gonna fall. That doesn't mean though that they can't surprise us, right? But this is typically also where you see good buying opportunities as long as you feel confident that, hey, they're going to figure it out at some point. This is one of the reasons why we have seen a decline. And you can see right here, though, right? Like this was a pretty big jump. And I'm going to show you on the charts exactly where we jumped, right? Which was right around this quarter and where we fell, right? And it's like, the charts are almost directly correlated to some of these fundamentals that we look at, which, as it should be for a lot of companies. Excuse me if you hear my daughter in the background. She is sitting here right next to me. So if you hear anything in the background noise, it is my daughter over here speaking. She's just really starting to pick up the talking thing. So anyway, with that being said, let's move on to the next chart that I have here, and that's just their basic EPS, right? And what they're expecting. And you can see here that analysts are expecting the company to, obviously not grow. Like we're flatlining here, and they're actually expecting revenues to decline, it looks like. And that's obviously going to drop the EPS. And it looks like, again, we're going to get back to some growth after next year. Again, just projections, but nonetheless, I do like to look at this because, yes, we're flatlining. Yes, we are, expected to go down, but they are also expecting the company to continue to grow at some point, right? And so it's just a matter of time where a company's it's too cheap, right? It's just too cheap to ignore. They're still growing, right? And they still have a lot of potential. Like maybe the risks are a little bit higher, but nonetheless, it's not like analysts are expecting, this company to continue to decline their EPS, right? Like we are expecting it to grow, and you can see like this massive growth right here. And so I don't know, it's almost normal, right? To kind of calm down a little bit, consolidate, before you get back to it again, right? But nonetheless, moving on to the next chart, we have operating profits and operating margins. All right, so this is like their core operating business and how much they're making. You can see here that operating margins have actually been increasing, and we're at some of the highest levels. And yes, we are seeing maybe a little bit of a decline here now, right? And just like every other chart that we're kind of looking at, there's kind of like a trend here, right? You can see their operating profits have seen a small decline, from the last earnings report, and expect it to continue to decline. So again, think about it this way, right? This is what analysts are expecting now, right? This is what's being priced into the stock, right? And then now we just signed this new deal with, NFL partnership. It might take a little bit of time for, us to start seeing that revenue stream, but nonetheless, that's going to increase revenues for sure. Yeah, but if they come out with their next earning report and, they pretty much say, hey, things kind of change. Like this is better than what we thought. Like our operating, profits are back up, right? And it doesn't come in at expected, right? I guess what I'm trying to say is that the expectations for this stock next earnings is not super high, right? Like analysts are expecting EPS to be down, they're expecting revenues to be down, they're expecting, operating margins and profits to be down. You get what I'm saying, right? Like the expectations is that the company's not going to deliver, which is almost a good thing because that gives them a better chance of delivering. You get what I'm saying? All right, so moving on to the next chart, the balance sheet. Not going to spend too much time on this, but look at this, right? The red is their assets and the blue is their total liabilities. You tell me if this looks like a company that's struggling right now. Like, holy smokes, man. Like, their balance sheet is immaculate. Like, wow. Yeah, that's pretty impressive, right? Again, we're not getting into like the details of, the income statement and the balance sheet and whatnot, but nonetheless, this is an overall picture. They're doing pretty well. And again, this has declined a little bit as well as everything else in the company. But it's normal, right? It's not always a straight ride up. Look here, right? We had a little dip before it ripped right back up. Hey, history tends to repeat itself. Doesn't always have to, but it tends to. All right, moving on to free cash flow. Another one I like to look at. And again, not the prettiest chart, but let's zoom out a little bit, right? We have been growing free cash flow, and we're up pretty dang high from where we were, before. But you can see this big decline in free cash flow, right? Just the last earnings report, and 2 consecutive quarters of a decline in free cash flow, not a good sign. But you can also see here, right? Look at this. Dropped off a cliff and then right back up. Again, expectations for the company are super low on every aspect right now, right? Again, we're looking at projections here, estimate for 2026. They're not really expecting them to grow free cash flow at all, pretty much flatline. So they don't have to do too much, but what they do have to do is not just completely drop the ball and just keep, losing market share, losing clientele, decreasing revenues, you get what I'm saying, right? That's what we don't want to see. Again, getting into some of these segments where they're making money, looking at these charts, right? This is where I get a little bit more confidence in the company and buying it, on the dip. Is look at this, right? So red is the American revenue, right? And you can see we're flatlining here. Like that's the issue, right? Is that we're seeing all this growth and now it's like, ooh, like are we plateauing? But check this out though. Like they just started entering into other markets, right? Like we got China, mainland revenue, right? And then we got the rest of the world. And it breaks down into different areas as well, but this is just a good guide to see how much growth there is overseas, right? Like if they can get this growth closer to this while continuing to grow the US revenue, like that's substantial, right? And let's not forget, like the NFL, that is a big US market, right? Not to say that it's definitely growing into other countries now too, right? But super bullish on that. I mean, it's again, there's so much potential for growth here, and it seems like they're not executing right now, but it's not to say that, it's going to happen over time, right? I mean, again, it's not always a straight line up. I think my biggest thing is just where the company's trading now, the value that it's trading, and the potential that it has, the risk to reward. In my opinion, of course, this is not financial advice, is good. It's good. All right, so the next slide here, we have the different product streams that they have, right? Or the two main ones, right? They have their women products. That's their bread and butter, right? Like their leggings was like their big seller. And then they have been entering into the men's apparel too, which is huge, right? I mean, look at this. I mean, we're seeing nice growth in the men apparel. It's not like they, came out with this and it was just a complete miss. It's growing, right? It's growing, and it's going to take time though, because like, again, they didn't, start the men apparel when they start the women apparel, so it takes time to brand that and to, let people know that, hey, Lululemon sells for guys too. And I've seen their products. I mean, they're super nice. Yes, it's expensive, but it is high quality too, though, man. I mean, God, I spend, less money on clothes sometimes. Like I buy cheap clothes and they don't last, right? And then I got some polos that I know they were probably like $120 when I bought them new, but I still have them and they're like 15, 20 years old. I mean, that's pretty insane, right? So if the quality is there, I do think there is some value there as well. But obviously with fears of a recession, the first thing that's going to go, right? The first thing that people are going to stop spending money on are unnecessary things, right? I'll buy a $20 or $30 pair of leggings instead of a $120 pair, right? That's going to be the first thing to go. And again, another main reason why we're seeing so much selling pressure on this stock recently. Okay, so before we jump into the technicals and I go over some trade ideas, the last chart I want to look at is just the PE ratio, right? And this is the forward PE ratio, and I have Nike up here as well. I'm comparing the two, and I'm doing that because Nike's been in a big slump as well. But in my opinion, like, yes, Nike still has the opportunity to grow, like, but it feels like they're a more mature company, right? Like, they're in a lot of markets already, right? They're everywhere. And so in my opinion, I just feel like they don't have as much growth potential as Lulu does. But this is the interesting thing is like, look what Nike's trading at, like what it's demanding in a PE ratio, 36. Lululemon's trading at 15. And this is the funny thing is that you can see that like they've actually traded pretty close together for a really long time. And then look at this disconnect here. And even then, right, it's kind of still following suit. And they're dropping together, but you get what I'm saying. This is half of what Nike's trading for. And I mention this because literally all that would have to happen is them to come out and say, hey, we're back to growth. If this thing's traded at a 30 PE ratio, the stock price is, let's say it's at a 180 now, that means the stock price could easily trade at 360. Just if investors felt that it deserved to trade at a higher premium because they know the growth is coming, right? Like that's the whole thing though. All it takes is for Lulu to come out and say, hey, I know we said this for next year originally, but we're going to change that. And, we're actually projecting a lot more growth at this point. So nonetheless, though, you can see that this has been the cheapest on a PE ratio metric, right? A forward PE ratio metric that you've ever been able to buy Lulu stock for ever. Well, I guess I can't say ever, but this goes back until January 16. I mean, that's a pretty long time, right? Just based off of this metric alone, I mean, this looks like a killer buying opportunity, right? But nonetheless, like, it's not all about that, right? I mean, there are risks with the company, risk of a recession, risk of tariffs, risk of slowing growth. It's all there. It all exists. But this is the thing, right? If it didn't, the stock wouldn't be trading where it's at right now, right? This wouldn't even be an opportunity because the stock would be $400 or $500, right? It's in times of struggle when you typically find the best deals and values and stocks, right? So with that being said, let's go ahead and jump into the trade ideas and the technicals of Lululemon, because I feel that we might have just got confirmation of a reversal. So this is something that you're definitely gonna want to see. But before we get into it, I just wanted to introduce you to my daughter. She is the next big investor. Alessia, can you say hi to the camera? Say hi. Say cheese. Anyway, with that said, let's get into the technicals. All right, so I have Lululemon pulled up on the daily time frame, and actually let's just zoom out real quick to the weekly so you can see the overall picture, how bullish this company has been in the past, right? And one thing I really wanted to point out, I love drawing lines of like major support levels, right? Like those just are some of the easiest trades to take in my opinion. But check this out, right? Like this was a level that this stock just ramped up to, right? And got rejected pretty hard, back down to the moving averages, and then ramped right back up, right? And then from there, fell right back down to that level, okay? And yes, okay, we wicked down, but the stock actually ended up closing right at that level, and then look at this, just rallied right back off that, right? And then now, for the first time in a really long time, we're back at that level. I mean, these are levels that you were buying the stock at, you know, back in 18 and 19, right? So you're telling me that I can buy Lululemon for the same price I could have bought it for back here? I mean, think about it, right? Like if you were looking at Lululemon here and then the stock's up here at like $300-400, you're probably like, oh my God, only if I could have, right? And then what happens though, when the stock actually gets there, people are now just super scared and they're like, oh man, like no, I'm not going to touch it, right? And then it starts ripping back up and they're like, oh man, I should have bought the dip. But nonetheless, right, you're looking at the technicals that I'm seeing, and this is just a very major support level, right? Also, remember how I was telling you that the stock had seen a big rally just recently? This was it right here, all right? And then if you look back at the charts, right, you saw that quarter where they came out and growth, like the revenues and everything was so high. Like it just showed a lot of growth. Boom, stock rallies, right? All right, we kind of consolidate up here to see what happens the next earnings. The next earnings comes out. That's when we see more flat line, even a decline in some areas. And look at the stock. It declines as well, right? Right back down. And then obviously they come out and they say, hey, like also on top of that, you know, we're guiding into 26 that we're not really expecting to see too much growth that year either, just because of the environments, this and that. We don't expect too much growth, right? And so that's what we're pricing in now. They're like, okay, well, you're not expecting much growth, and see you bye, right? Like I'm not holding this stock for 2 years for no growth. But you know, when you get down to levels like this, now it's like, oh my God, like come on. Like God forbid they come out and beat these expectations. Like I was saying, I really feel like they are really conservative on their estimates right now. Let's just put it that way. Which, you know, I like and dislike it. It sucks when you're a stockholder and they come out and say stuff like that, because look what happens to the stock price. But it's good in the other areas where, you know, chances of them actually beating, you know, their projected revenues and EPS is going to be a lot easier this quarter coming up. Okay, and then obviously the NFL deal, that's going to help grow revenues as well, and maybe they'll give us some guidance and some feedback of what they feel that's going to generate, right? That's going to be really fun to watch when those earnings come out, to see what their plan is with that new NFL deal and what kind of revenues they're going to, you know, expect from that. So anyway, let's zoom in though. Let's go over some trade ideas, right? I want you to see the bigger picture though of the technicals, because again, based off of that, right, we are at some major support right now. And you can see that's that line I drew, right? We're just hanging out on it. Check this out, all right? Here's another thing I want you to look at. All right, first of all, the perfect reversal, right? You have the sell-off, and then you have the consolidations, right? And what you want, and this is where you gotta be careful, right? What you want is a breakout above the moving averages, right? Which we did here, but guess what? It was a fake out breakout. They got you. They got you good, because if you bought this thinking like, oh my God, we finally broke above the moving averages, this is confirmation, and you didn't have a stop loss, guess what? This thing dropped, right? It's unfortunate, but it happens, right? Still, you know, this stock moves quickly when it does move. So anyway, we came down here. We hit that level that I just showed you on the bigger time frame, right? Bounced off it, and we came back down here. Now check this out. It doesn't look like much, but this is technically a higher high, okay? We came down here and we made a higher high and we bounced. Now look, we are above the moving averages. This time though, look at this time, right? It was a quick candle up, right back down. Here, we're hanging out. We're just chilling, man. We broke up above here, right? And we've just been hanging out above here now, right? That is confirmation in my opinion. But again, look at the charts, man. I mean, like, we could not get above the moving averages, right? Never. And this is on a 4-hour time frame. Like, keep in mind, like, it's a lot harder to break above the 4-hour moving averages than it is like a 1 hour, then a 30-minute or a 5-minute, right? Like, it takes time to break out of a 4-hour, and this is a bigger time frame. So therefore, this is like a longer, upside, right? Like, breaking out of a 4-hour, like, I could see us coming right back up to here. Now let's zoom in a little bit more now, right? So this is the candle of the news that came out just today, and we gave all that back, and now we're retesting these levels again. That's pretty normal, right? Rips up, comes back to retest these levels, and then I would expect this to be a continuation. So if you're watching this video, and in my opinion, if you can get in at this level, I think that's a pretty good opportunity. So with that being said, again, I mean, you see here, right, we broke out of this level, right? Now we're coming back down to retest this level. I mean, it's just, that's how it always happens, right? I mean, that's never a straight ride up. But what we're doing here is we're making higher lows and higher highs. And what I want to do is I want to show you last time this happened, right? Where we had the sell-off, right? We bottomed out here. We made a higher low, right? And then look at this, continuation up. It wasn't a straight ride up, right? We kept coming down to retest this trend line here, but it was just, once the reversal was confirmed, this thing just kept going, right? Until there was a reason not to. I mean, again, this was a pretty long play here. If you got in down around here and you rode it all the way up, like I said, I think it was like 120 something days. That's a long time, right? Of just riding out the gains, right? So with that being said though, we are looking like that's about to happen again, in my opinion. And then also with this news coming out, I think that's just even more confirmation. So, again, not financial advice. I, at this point, just wouldn't even mind buying it right here. Could it come back down to here? Maybe. But you could set a tight stop loss up here, right? Because again, if we break down back below these moving averages, that could be pretty bearish. And this leaves you a pretty risk-free trade, in my opinion. From these levels, what, a 2% downside? Man, I mean, honestly, like, with a longer swing trade and with the upside that you have, right, like, even if you put your stop loss down here, okay, you lose 10, 11%, right? Because if we break that level, like, that's really bad. But you get what I'm saying. But let's see what the potential profit would be, right? So let's see. Even if we ride it back up to the moving averages, we're looking at about a 40 or 50% return. So you're risking 10, 12, 13% to make 50. Like, for a swing trade and for a longer term trade, that's not that bad, right? Like the R multiple on that's decent. And obviously those moving averages kind of take us right back up to, where it was. We have a lot of action here, right? Like, we couldn't break above this for a while, couldn't break above it here, and when we did break above this level, right, we went up pretty quickly, which means this is probably a level that we'll get rejected off of right around here. But that doesn't mean that we're just not going to get rejected, come back down, test the trend line, and keep going up, right? So, I mean, personally, I think there's even more upside, depending, right? I mean, literally, when was this? This was the beginning of this year. The stock was trading at $4.19 at one point, right? And now we're towards the end of the year, and it's trading down here. I mean, it's crazy. But it just shows you how fast this thing can move when it starts to move, right? And so, obviously, if we get back up into the 400s, well, we're looking at a 125% return. So you tell me, you put your stop loss down under here, right? Okay, you're risking maybe 15, 16% to make 100. Again, not that bad, right? And in my opinion, I think it's going to be hard to break this level. Now, if there's a market downturn or something like that, that's a whole different story, because then everything falls, right? But nonetheless, I think this is a great opportunity. Those are my thoughts when it comes to a trade idea, okay? Getting in right around here, you put a stop loss down here for a tight stop loss in a shorter term trade. But, if you're looking more long term, I'd put it under here, right? Because if we break this level, then I could really see us going lower. At this point, though, I don't care which way you look at it. I think there is way more upside than there is downside in this stock. So let's look at the RSIs, like on the weekly, right? We're trading pretty low on the weekly. On the daily, we're coming back up again. But again, I mean, that's normal. I don't really trade solely off the RSIs, but it is good to look at, right? Because when you get down to like levels like this, it typically bounces, right? And you can see here, and again, we're making a higher low on the RSI. Check that out. We dipped down here, right? And then we came down here and looks like we made a higher low, right? And now we're coming back up. So again, I mean, there's so many confluences in my opinion on this. Looks like the MACD down here is also curling over. So that's all I have for you guys in this one. I hope you found this video helpful. Those are my trade ideas. In my opinion, I don't really think you can go wrong buying this stock. You can dollar cost average it, you can swing it, you can day trade it. This is the thing, right? In my opinion, it feels like this stock is about to reverse. And when it reverses, it's going to be in an uptrend, right? Like it's been stuck in a downtrend for a while now, right? And we just finally broke out of that, right? I mean, it could be a fake out breakout, but based off the technicals and the charts, we have broken out, we have come back down, we have retested those levels, we are holding that level. That is pretty bullish, right? The MACD is curling over, the RSI is making a higher low and is also oversold, right? I mean, there's so many confluences that are lining up here, and it just, in my opinion, I think when this reversal starts, again, it's going to be like probably another 90 to 100 days. Obviously, if earnings come out and they drop the ball, that's a whole different story, right? Those are always a risk with every company, but nonetheless, you know, vice versa, they come out and they kill earnings. As we mentioned, the expectations aren't that high, then the stock could rally huge, right? But as always, this is not financial advice. Please put your stop losses in place. And if you're still here, please consider subscribing to the channel, liking this video, and I'll see you guys in the next one.